What's up, everybody? Michael Silva here. Get ready for a wild week of volatility. Why are we going to get so much volatility this week? Well, we got a lot of companies reporting earnings, of which Microsoft, Alphabet, or Google, and Meta, to name a few of the many that will be reporting this week. We also are going to have the Fed interest rate decision come Wednesday. We get GDP numbers the following day, and then we get some core PCE data and personal spending there on Friday, along with consumer sentiment. We got a lot to discuss on today's market brief. We're going to be discussing the new weekly expected moves, the daily expected moves, if you like to look to see where price action may go into tomorrow's trading session, and we're even going to share some trade ideas, some indicators as well. We're going to go ahead and hop right into today's show. We do know that the NASDAQ 100 has been doing its rebalance. I believe that it finished today. I should have pulled up an article on that, but we did see energy and financial. So this could be a rotation into these names as we know about the rebalancing taking place. So energy and financials led the way. Tech was down on the day. Healthcare and utilities, more of a risk off, but it seems like it's kind of a heavy cyclical type of day. All the indices, though, remain unchanged. The VIX was also green up on the day with all of this, too. So a lot of back and forth price action today. Not much of a great trading environment, unless if you're in very tactical. Now, we already discussed what's going to be coming on the radar. Tomorrow, we got S&P Case-Shiller home. We got CB consumer confidence and get some oil numbers as well. But I don't think that these are going to move the market all too much. The big ones are going to be coming here on Wednesday. And the Fed rate decision has been priced in. And by priced in, I mean there's a 98% probability that we're going to be getting a 25 basis point hike. When you look out a month, September, this is going to be an interesting one to watch to see if this changes, if we're going to get an increase in the likelihood of a higher chance that we're going to get another 25 basis point hike. But as it stands right now, the probability of the Fed pausing seems to be more likely at the 525, 550. So the surprise would be if they do not hike, or if they rate hike more than 25 basis points. That would be considered a surprise. Now remember, the core inflation, their target is 2%, and we're still looking at a 25-year chart. We're still very high, okay? And this is interesting because a lot of people are saying we hit peak inflation. Maybe so, but what happens if inflation ticks back up or goes more sideways and so forth like so? Well, you got to pay attention to, well, we can take a look at various commodities. Look at the grains. This is a 1 month change, and look at just the moves on these on a 1 month period. You would think that, hey, even with energies, which is one of the biggest weights there in the CRB index, we're seeing large increases here on energies, grains. You can see over here, if you go to livestock, also a lot in the green for a 1 month percent change. Then if we look at softs, also some pretty big moves here in the soft. So this tells me, hey, is it possible that inflation might start to slow down its rate of going down, perhaps potentially even uptick? We will see if that is going to be the case, but it will be hard to reach this target or the Fed to start cutting rates if inflation remains obviously sticky. Now, on another flip side, let's take a look at some other assets like the dollar. The dollar has been rising. Remember, Janet Yellen went to China. Boom, the dollar dropped for whatever reason. It just happened to be perfect timing. And now we're kind of making this U-turn back up. But we still have that area of resistance right up here in this area. Remember, a rising dollar typically puts pressure on equity markets. We've been seeing that as a strong negative correlation. And perhaps that this big fall in the dollar is what helped boost various commodities. And now that it's starting to rise back up, perhaps that maybe puts the kibosh on the rally. I don't know. It's hard to say, as there's still a pretty big gain, as we pointed out, from a month-to-date perspective. If we take a look at the 10-year yield, the 10-year yield is also starting to bounce from this back test over here. So if we think that rates are going to be coming down, we'd want to see it back below that's 30. It's 37, but it's 3.7 on the yield as it stands right now. We closed at 3.85 on the 10-year. Gold is pulling back. We discussed that, I think, 3 or 4 trading days ago. We said, okay, so it kind of already broke out. Now, it's not really the greatest area to just buy, right here. You'd want to see price pull back. And right now, we're just seeing a pretty steady pullback, 3-day pullback, and it's still holding relatively high. So we said there's a possibility that this could be potentially forming an inverse head and shoulder pattern. So this could be one to potentially watch where we can crack through that 2000 level and potentially go for this prior swing high. Okay, so this could be very well an opportunity. You'd want it to hold above 1950. If it starts breaking back down below there, all right, give it some more time, and if maybe you turn back up through 1950, that could be a potential buy spot. But we have to wait and kind of give it a little bit more time. If we take a look at oil did see a big day today too as well, getting back above the 200-day moving average, closing above it, which is something that we haven't actually seen for quite some time. The last time, I believe we didn't get through it and close above it there. The last time we closed above it right over here and was followed through with some downside action. So we'll see here with oil on the rise, commodities on the rise, various commodities on the rise. If inflation, right, the biggest decrease of inflation came from when we started hitting our peak in oil. So if this is going to start moving itself back up, it's going to be interesting to say the least. It's a very interesting environment. If we take a look at the S&P 500, so last weekly candle was this one right here, and right now we're trading just within sight of that, slightly up on the week as it stands, 0.4%. Okay, now if we start getting back below the low of this, then I would say there could be open some more downside to that. If we take a look at the daily time frame, these are the weekly expected moves. The upper is 458.39, the lower is 445.97. That's for the SPY. I did anchor a VWAP here on the last video that I did, and it came down like this, and we did get back above that swing high, so it does open the door to potentially come for that 458.39 as long as we can hold that level. Now, if I look into the 15-minute time frame, we're also holding above the week to date, which is the daily anchored VWAP. We're still above that quarter to date, and we're back above the 5-day inclining moving average. You can see price has been making little U-turns throughout it. Boom, boom, boom. But remember, the more that it's tested, the more likely it is to break. So you want price action to start getting stronger. If you are bullish, I would say you'd want price to start getting back above these little swing highs over there, right? So maybe not if it's a straight shot, but perhaps if it starts doing something like that and then breaks out to the upside, gets above that 455, that opens the door to 456 and potentially 458. Just remember that there's going to be a lot of volatility this week, so there could be a lot of whipsaws. Why? Well, we discussed that, the earnings, as well as the Fed interest rate decision and the various macro reports that are going to be coming out. The daily expected move is 451.55. So if we do see price cracking below the 5-day moving average, look at 451.55 for a potential low on the day, which matches up with this kind of area of prior support. And then, like we said, if it comes up for the upper daily, that's 456.85. If we take a look at the Qs on the weekly time frame, the last weekly candle was more bearish, obviously, than the SPY as we started rotating out of tech, and we closed pretty much right at the low. And this is typically a bearish candle, but you need confirmation. You need it to close below that. However, I'm showing you the weekly charts because the 5-period EMA you can see is a clear in an uptrend. So even if we crack and we break below it and we come down to this 5-period EMA, it's still possible that we just go sideways, potentially before rolling over or before trying to get back up and climb for that prior swing high. Okay, so you need confirmation. As it stands right now, it's very early in the week. And if I take a look at the daily time frame, we'll look at the weekly expected move. It's 384.37 on the Qs to the upside, 366.89 to the downside. And you can see price, the candles here. So the last 3 trading candles, right? This is what I mean by when I say like risk can happen very quickly. You could see that the market went, up 1 day, 2 day, 3 day, 4 day, 5, and then basically flat there. But it took 1 day to wipe out, to come and test. If I just draw a line, boom, 1 day to take out this day, to take out this day, to take out that day, to take out this day, and to take out that day. All right, so that's 3, 4, 5 trading days knocked by 1 day. This is a pretty big authoritative candle to the downside, but it didn't get below that quarter to day anchored VWAP. Okay, then we gapped up, which is typically bearish after a move like this, especially when you close at the low. We closed where? Right there, and look at the body of the candle. Notice how the body there is smaller than the body here. So momentum was strong, then it slowed, and now the body of the candle represents more of an indecisive candle. Are we going to continue to sell off? Are we going to consolidate? Or are we going to bounce? Okay, and this is what I mean by price action expands and contracts. So you can really see that here on the 15-minute time frame. So if you are bullish, you really want to see price action close and hold above that quarter to day anchored VWAP. Just take a look here at how price the last couple of trading days have been hugging for dear life on this quarter to date anchored VWAP. And somebody asked me, I think on Twitter, why is the quarter to date important? There might not be a right or wrong answer to this, but how I see it as important is there's a lot of volume traded towards the end of months and repositioning of portfolios, especially with various asset managers, especially quarter ends, because we have new earnings season coming up. So we get a lot of positioning, a lot of rotation, a lot of things taking place. So if we just anchor to the start of the quarter, we can see, hey, is the average person for the quarter based on volume in the green, or are they in the red? So you can really think of this as like a psychological standpoint. If everybody, right now we're basically just above and we're even. So, hey, the average person based this entire quarter, they're doing okay. They're fine. They're not really worried. However, if we start breaking down from these levels, then all of a sudden the average person is actually underwater based off of time and volume. And then you start to say, okay, if it starts going further and now people are like, the average increases of who's underwater, then all of a sudden more fear kicks in, and then you could potentially see capitulations, right? Or stronger sell-offs, or people stopping out of positions. So that's why I think that it might be important to look at these levels, but then you could look at it at multiple different areas, like the week to date, which I do, month to date, daily, and sometimes intraday too, or on big reports. Now, back to what I was saying about expansion to contraction. You can see strong move down. Now, what do you see? Price is contracting very tightly here, almost in a wedge formation. So, we get the report on Wednesday, and we have also big earnings Tuesday after the close that are in the tech sector. Remember, Microsoft, I believe it was, and Google. Yeah, so Microsoft and Google after the close. This could be interesting to watch, because if the market likes what it sees, we might bust through this level and come and test the upper daily expected move, the 5-day moving average, which is starting to decline. So prices below it, you got to be more cautious, more careful, or even the upper weekly expected move. So right now we're holding the quarter to date, which is what? It's bullish for people that are invested since the start of the quarter, right? We're below the 5-day moving average. So short term, as it's starting to decelerate, is bearish, right? Okay, so there's a little bit of a conflicting thing here. So you need to be patient or very tactical. So how I see it is, hey, if we start breaking out, boom, yeah, maybe we can play it up into this area, or to retest the 5-day moving average coming into it. Okay, I don't typically hold, large positions of individual stocks into earnings. It's just not my style. But if it starts breaking down and we close below it, this is going to open the door, obviously, for the lower daily expected move and potentially even the lower weekly expected move down there at 360, 689. Okay, enough on that. The IWM, we discussed this on the prior video too, as well, as how we anchored the volume weighted average to the high. And this right now, we've been about 9 trading days above this anchored VWAP, which is the most we've seen actually for since we've started anchoring it from this area, right, from the all-time high. So this is a positive note so far, and we're seeing like a little bit of a pullback, right? We saw a move from down here at 180 to just about 200, and now we're starting to pull back. So I would say still pay attention to see if this quarter to date from the all-time high can hold, but then also the quarter to date anchored VWAP to hold as well. I'll put in the year to date anchored VWAP in a following video, but if these levels, if it pulls down, or even not, or if it just doodles around here and consolidates more, to me this is actually somewhat constructive price action to go try to actually break and get to that 200 to potentially even higher. But it's still not something that I want to just run into after a very strong aggressive move. I like seeing pullbacks and consolidations. Okay, if we take a look at the NASDAQ bullish percent index on the NASDAQ composite, you can still see we're in that overbought condition. Remember, overbought can stay overbought for a while, and it can quickly recycle itself right back down to oversold condition. So we do have that negative divergence there on the RSI as things have been getting pretty frothy. To see that oscillate outside of that at some point makes sense. The BP-SPX chart is also very frothy too as well on the BP-SPX. Like this is, 79.8%. That's that number right there. Is the amount of stocks in the S&P 500 that are on buy signals based off of the tic-tac-toe charts, right? The point and figure charts. And you can see the RSI is in that overbought condition from the likes of which we haven't seen it this high of reading for quite some time. If we take a look at the summation index, still in a bullish trend over here with the parabolic star underneath it. We're starting to round out top a little bit. So if we don't start bouncing here quickly, this could start to turn itself over very slowly. As you can see, we have that negative divergence on the Nasdaq McClellan oscillator there too as well. So I just, it's bullish right now, but, just pay attention to see if this thing starts clicking back over. And then the NYSE summation index is still full bull mode. The last potential change in trend was right here, which pretty much tagged the bottom, and we've kind of been up, down, boom, and we've been moving quite nicely there. I will note price is starting to coil up very tightly here. If you pull up a candlestick chart, and it's doing so on a negative divergence on the NYSE McClellan oscillator. So we've seen these negative divergences form many times. I've shown them and shared them many times, and positive divergences, and they play out, and they've been quite accurate. So just be aware that, yeah, we're squeezing up higher, but the internals are slowing down a little bit. The last indicator that I'll share with is the Saylor to Schiff tool. This is looking at the rate of change between Bitcoin and gold. This did hit a sell signal, and it got the sell trigger as well. So, this was the prior week. The prior week did sell, initiate the trigger, and then we got below it. So we had a buy signal right here, the buy trigger, and it just kind of went sideways. It didn't do anything. Okay. Now we're on the sell signal. So we've been getting a lot of whipsaws, but now it's telling us, hey, be a little careful here, because the ratio between Bitcoin and gold says that, hey, something might happen, something might not. The last sell signal, I can show you right here. The last sell signal was right over here, and price action went from 30,000 down to around 25. Okay. And then we started to turn positive, right? If you front run it, and we saw a nice move up, buy signal, but it just kind of whipsawed us right back out. Okay, you can see throughout history we've seen, and by the way, this has caught every big price drop in the price of Bitcoin. Is it the Holy Grail? No, it's not the Holy Grail, but it's still working, and I'm going to keep using it until it, I guess, stops working. But as it stands, we had that sell signal this prior week, and we're seeing some weakness to start off the week. Now, can this turn right back around? Yes. And then I would wait for another buy signal. That's simple as that. Let's go over some trade ideas, some random stuff that I'm seeing. Now, we do have, like I said, big earnings coming out, and I've seen consumer staples kind of get strong. So I've been looking at some of these charts, and I know McDonald's is reporting earnings on Thursday before the open. I know Coca-Cola is reporting before the open on Wednesday, and I'm going to share just some of these charts that I shared with the Discord group. If you're not there, there's pinned comments that'll kind of lead you to that. I have pinned comments for discounts on Bookmap. I have pinned comments to my Patreon, which is you got to sync Discord up, and then you get access to my trade ideas and kind of stuff. McDonald's is one that I like. Just yesterday, or the last trading day on Friday, we hit an all-time high. And what you see here, right, you can see price is kind of bumping around this 300 marker. And, we had this strong move out of this pivot area right over here. Boom, we went on this massive run, and it's been consolidating that for quite some time, and it's doing so, and you could really see the volatility of it starting to tighten up. And what do I mean by that? Well, you can see there's clearly a strong pivot area here just around this 300 marker. We started to take a breather, right? Boom. And then it's starting to get tighter and tighter and tighter and tighter. This doesn't necessarily mean that it's going to break out to the upside, but it gives us a good risk to reward the tighter the price action gets. So a lot of my trade ideas and trade setups, they're looking for price action to start to coil up, right? So you can see right here, it's flagging, but then over here, it started to really get tight into this area on the right side of the chart. And then we broke out. You can buy a breakout, and you can have a stop under that swing. And then if you do that, or if you even have it lower, it gives a good entry point, and it is happening above the 20, 50, and the 200-day inclining moving average. So right now, price action is tightening up. Does that mean it's going to break out and start moving higher? No, because we might take out the 50-day moving average. And if so, you want to be more careful at that point. Or, volatility picks up, boom, it shakes out everybody, and then it starts to head higher. Okay, this is why I like the U-turn trade too, because if it does do that, boom, breaks down. Okay, so let it do its thing, and if it comes back up here and starts tightening back up, okay, then enter here. It'd be the same thing if you enter here, but you don't need to wait out this kind of dip, right, if that were to happen. But I do like this chart. Obviously, it's in good bullish context because it's just hit its all-time high, and if it starts breaking through 300, maybe it's going to go on another run like this. Okay, so that's McDonald's. This is CCEP. This is Coca-Cola Euro Pacific. So volatility may pick up here too as well with Coca-Cola reporting earnings. But you can see very same situation as McDonald's, right? So we broke out of this pivot. This price action got really tight up in here. bam, if you entered on the breakout, it went on for a nice run. Not always the case, but it's starting to do the very same situation. How price took a big breather, now it's a less of a breather, now it's getting a little bit tighter. So if we can get through 66, boom, and then you have a stop loss under here. It could be a longer term swing setup, or if you just want to track the 50-day moving average, have a tighter stop and see if it gets going. There's another one that obviously looks good, has a yield there too as well. McDonald's obviously has a yield there as well if you like dividends. Here's another one from the restaurant section. This is Jack in the Box. You can see this one's a little bit more choppy. This is less volume being traded, which, some people are okay with that. Some people do not like that. And you can just see here, we kind of hit this 97.5, and you get forming somewhat of a cup with handle pattern as it stands right now. We're still above an inclining 50-day moving average. Volatility, it got really tight here, and then we started to see it really start to kind of shake up a little bit here. So I'm still watching this 97.5. If we can kind of clear that level, maybe it takes off and starts trying to go for breaking 100 there for Jack in the Box. All right. Another really random one. This is Nathan's Famous. This one's a very low volume stock, but I was just looking through them, figured I'd share it. So this is, I personally am not going to be trading this one, but I did want to just show it, right? Some people like Nathan's. I don't have one where I live. But you can see price actions kind of coiling up here. And if you look on a weekly time frame, it looks like one big, flag pattern as price action is getting very tight. But I'm just noticing this a lot in some of the restaurant, bar stuff, and then also some consumer staple names that have been taking off. The last one is OC. This is an industrial name. I'm just showing you this because this is known as a quote-unquote holy grail setup. If you don't know what that is, it doesn't mean that it goes up all the time. It's just from a book from the early 90s called Street Smart, and you can Google or go to YouTube and type in "figuring out money holy grail," and I did a YouTube short on this trade idea or trade setup from the book. So you basically take an EMA 20 and an ADX, and you want the ADX to be above that 40 marker, above the 30 marker, right? And basically rising. It's okay if it pulls back, but then when price action pulls back to the 20 EMA, this is where the setup kind of takes place, where it pulls back to the 20 EMA, and then if you can start breaking the high of the prior candle, you enter in on that breakout, and then you do that with a stop below the low of the swing low, and then you play it to this prior swing high. And it typically gives a good risk to reward where you risk this much to potentially get this much. And sometimes, it obviously goes even further than that. Sometimes it just stops you out. And then if it hits the stop, obviously before entry, then you have to you just don't take the trade setup, or you restructure the trade. But this hasn't actually retested the 20 EMA for some time, and this has been on just a monster run. So it tested it here, we did that, it ran up, it tested it here, boom, and started running up. It didn't quite get down to it, so now we're going for that test again. Could be one to watch or to see how it shapes up. The pullback itself, not the greatest. I like to see pullbacks more like this take place, where it's on some lower volume, whereas these kind of days were a little bit more authoritative. But figured I'd share that anyway. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.